Let's go back over here to the phone where Oliver Sloup, Blue Line Futures, is here with us. Oliver, I want to get your thoughts today on the overall view of all of this, what's going on in the protein complex here with more downside pressure again today.
Yeah, live cattle, feeder cattle under a little bit of pressure, especially the front months. We've been talking past several weeks about being a little bit skeptical on the February contract, kind of running against the shot clock and a softening cash market. April, we're surprised isn't holding a little bit better, but I do think that we'll be able to hold 116, 115 and a half area further out. One thing that we've been a little bit more upbeat on is those deferred contracts, and if you look all the way out to August, that is a very constructive chart. And one of the things that we've talked about several times on your show and continue to reiterate with clients is the fact that we haven't seen very much fund participation in the livestock markets. We've seen almost every other commodity sector rally, from coffee to sugar to lumber to Bitcoin to stock markets, et cetera. Corn, as we had just mentioned, everything has rallied on inflation fears over the last several weeks, couple of months, except for the livestock markets. But I think there's going to be some good opportunities, and we could see some fund participation in those back months of cattle.
Okay, traditionally in the past then, Oliver, you were talking about hedging against inflation. And we've talked a lot about that here on the Market Day Report because there is concern about that. In the past, has the fund money come to the livestock market to hedge against inflation as well as these grains and everything else?
Well, typically the funds, yeah, it's kind of a buy first, ask questions later type of environment, but we really haven't seen that take place in the livestock markets. But I do think that it's only a matter of time before that happens. And if you look at the front months of live cattle, you're scratching your head saying it's not happening. But if you look all the way out to August, as I had mentioned, we're making new contract highs today. So I do think that if you look a little bit further out on a time frame, that we'll continue to see the funds step into some of these deferred contracts and push these prices higher over time. So I think there's an incredible amount of value in those deferred contracts for cattle. And I think lean hogs, you can say the same. The front months really not performing, but if you look a little bit further out, they're holding their own. That February was under quite a bit of pressure, but April and beyond, yesterday and today, still holding their own. And I think overall looks relatively constructive on the technical landscape.
All right. Back over here on this live cattle market, February is down 20, but as Oliver was mentioning, August is up 12 at 116.17. So, yeah, firmness back over here on these deferred contracts. March feeder cattle down 67 at 133.65, and the April down 57, with the May down 27. All front five contracts on the lower side there, and in the hogs as well. February down 37 at 66.47, April down 62, May down 75. Oliver, great to visit with you. Let's talk tonight again on the Rural Evening News and get your wrap up on all of this as we get ready to go into the final day of the week tomorrow. Back to you, Tammy.